Okay, so now we're going to take a look at XOP, which is the S&P Oil and Gas Exploration and Production ETF. I'm starting with a similar chart that I looked at last time I analyzed this for you. The green line here is XOP, and that shows the ETF that you're interested in. The orange line shows USO, which is the oil ETF that we track on a daily basis. You can see that the green line, XOP, is significantly more bullish than what is going on with the orange line. So that's just an interesting thing to note. We're pretty bearish on USO still and think it's going to continue down, but I'm not convinced that the same thing is going to happen for XOP. So let's get into the Elliott Wave analysis and see what we can learn from that. So here is a look at everything since basically its inception. It's been in a massive counter trend pullback for the bulk of its life for sure. We think it's a real possibility that this massive move ended in 2016 and a much more bullish trend is going to start on XOP. This is a big three-wave move. That's the stuff of counter trend moves. So overall, there's a ton of potential for it to continue. So if we zoom in here, this is something that we talked about in depth last time. You have this big down leg, which is this down leg here. From 2014 through 2015, basically. That looks like it ended in 2016. This nice retracement occurred, actually retraced a Fibonacci number, which is a whole nother story in itself, but it's an important resistance area that it hit and it turned down from there. So clearly it found some resistance. It's not the end of the world. It doesn't ruin this advance here. This advance can still continue, but it did kind of mark a line in the sand that has turned XOP lower and creates a very important test for XOP to determine if a new uptrend started or if this downtrend is going to continue. So let's zoom back in on the advance off the 2016 low here. This is it. We were talking about the importance of 3750 last time we analyzed XOP together. And XOP did move below 3750, and I said no matter what, no matter how you wanted to label this advance here, if XOP moved below 3750, it indicated that a high of greater importance was in and that weakness would continue. And the thinking was it would move at least down into this yellow area here before it was over. Could potentially move down towards 30 before it's over, and then I advised if you did own XOP that you shouldn't own it after it moves below 3750. So hopefully at this time you do not own XOP, even if it's bullish overall, which I think there's a realistic possibility that XOP is in the start of a new long-term uptrend. I just don't think you want to own it now while it's heading lower and could head potentially quite a bit lower. So I think you need to be neutral on XOP. You would need a move back above 42 to turn the chart higher from here. So it takes a pretty substantial advance to get XOP back on track. I would expect lower levels for now. I certainly would while it's trading below 42. If it does move above 42, then the door opens to a great buying opportunity. But as is, I think you need to expect this pullback to continue because, again, it looks like this entire multi-month move, almost a year, or 52 weeks, 12 months, however you want to call it, came to an end. And so to correct that length of a move should last several months. It's already lasted, looks like 3.5, 4 months. It can easily last another 3.5, 4 months or longer. So just not a great time to own it. Again, I would want to see a move above 42 before considering owning XOP again. And if it moves below 30 at any point, then the whole deal is off. This entire advance becomes a counter trend move, and that means the long-term downtrend is not yet over. So those are the levels I'd be watching. I hope that's helpful. I got one more video coming your way in just a moment. Thanks.